Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to take us beyond the bell. Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide as we parse the most crucial moments of the day. And Massar, there have been a lot of interesting moments of the day, but I think the most crucial moment is right now.
Yeah.
Session lows.
Well, yeah, exactly, right? And we're holding on to it, right? It's not like we're seeing some buying as we've often seen in the final few minutes of trading. I'm just looking at, the sector trade here, and you are looking at a very conservative trade here among the outperformers, but they're still down for the day. Something like materials, utilities, energy, your only outperformer here of the major industry groups in the S&P 500.
And it feels like for much of the week, at least, we've seen kind of similar behavior with traders. I mean, stocks do nothing for much of the day, and then they decline into the close. Volume goes up, and we hit session lows when we get close to the bell.
Yeah, and I'm just looking at volume right now. For the S&P 500, volume is 10% above the 10-day average. So again, more activity, more trading on days where you have declines.
Yeah, absolutely. Here, of course, that's basically right at this time right now. Across the tape, still looking at roughly, I think, around a little less than 11 billion on the day. I am curious, though, about this idea, though, too, of this kind of seasonality of this, too. Like when you have so many people away, you can get these sort of outsized moves, not only in equities, but you're seeing similar moves in treasuries as well. All right, we get the closing bells here. Let's just walk through them real fast. With the Dow Jones Industrial Average lower once again by about 300 points or about 0.8%. And I'm just going to double check this, but now the Dow Jones Industrial Average looks like it is going to close below that 50-day moving average, joining the S&P and the NASDAQ. The S&P closed below its 50-day moving average earlier this week. The NASDAQ last week. The S&P down again, 34 points or 0.8%. The NASDAQ composite down 158 points or about 1.2%. And an interesting milestone as well, almost subverted here for the Russell 2000, lower by about 1% on the day, and it is just a whisper away from its 200-day moving average. So on a technical level, across the board, things are not looking good.
Yeah, I feel like we are talking a lot about the technical trades, right? In terms of things that were once overbought, now getting maybe closer to oversold, or just kind of watching some of those technical moves on a lot of major averages, Scarlett.
All right, let's take a look at how the sectors have performed. And we can do it two ways, right? 11 groups or 24 groups. This is more dramatic, looking at 24 groups, because energy is the only group that is in the green. That is as oil prices rise. Exxon has been higher all day. You also have pharma stocks gaining just by a little bit as a group. That's powered by Moderna and Pfizer. On the downside, take your pick. You have two groups falling more than 2%, autos and consumer durables. That's really home builders. And the healthcare equipment and services space, Cigna, a big decliner there, all down by at least 2%.
You got to do it. What about the 48 groups or 69?
69? Well, you know what? Sometimes those indexes only have like one or two names. It's not a great gauge of things.
Where do we want to go? All right, let's just
party pooper. Sorry.
No, you're not a party pooper. Just real quickly, because we have them just crossing the Bloomberg. We've been talking about retail sales, specifically retail earnings this week. Ross Stores coming out with their second quarter numbers, $1.32. That's 16 cents better than what the street was forecasting, so that's a beat. And Ross Stores seeing their third quarter EPS of $1.16 to $1.21, so they're upping that forecast. The forecast out there is $1.15. Ross Stores up more than 5%. You've got some more earnings, Romaine.
Yeah, Applied Materials out here. Their 3Q net sales coming in at $6.43 billion. That's a slight beat. The street was looking for about 6.2. We're just going to round it up a little bit there. So a beat on the sales figure, a beat also on EPS, coming in at about $1.90. The street was looking on average for $1.73. Here's your forecast here. The company, and a pretty interesting forecast, 4Q net sales, the company says could come in at about $6.5 billion. The street was only looking for about 5.9 here. So that forecast for the current quarter that we're in, the current fiscal quarter that we're in, would actually be a beat should it actually attain that $6.5 billion forecast. Shares higher by about 4% here in after-hours trading.
I'm just going to say that's a pretty significant move to the upside in the aftermarket, considering this is a stock that is up more than 41% so far this year, and that's outperforming the SOX, which is up about 36%. So really interesting to see, and we talk about the importance of what's going on in the semi sector, right? In terms of so much tells us about what's going on in terms of demand for chips that go into items, and so really interesting, or even semi equipment as it is with AMAT, really just tells us a lot of things, Scarlett.
Yeah, as you were talking about the forecast on fourth quarter net sales, interesting that the average consensus among analysts is for $5.9 billion. In fact, the highest estimate is only $6.3, with Applied Materials looking at net sales at $6.5 billion. Everyone's going to be looking for some clarity and some more explanation on the conference call on what's driving net sales in the fourth quarter.
As you guys have been going through the numbers, I've been looking through the press release and looking at the commentary from Gary Dickerson, the president and CEO of the company. You can do another shout out to AI here. He said, over the past several years, we've focused our strategy and investments on key technologies to accelerate the Internet of Things and AI era, enabling us to consistently deliver strong results in 2023 and positioning Applied Materials for sustainable performance. I assume a lot of questions will come from analysts about what it plans to do in order to harness the uptick in AI that we've seen.
Yeah, I'm curious as to how big of a player they are in that space. And obviously, most of their business is foundry, so I don't know enough of whether the type of chips that AI needs, or the folks who are sort of investing in this need, whether that's something that comes through their foundry or not. It'd be interesting to get some clarity on that, or whether they're just kind of blowing their own horn.
I think there's a fair part of that for every company.
They all do that, right?
Yeah.
No, it's interesting, and they have a decent amount of cash on hand, generating $2.58 billion in cash from operations. So we'll see. Lots of questions. We'll continue to track, but again, as we said, the stock bouncing up in the after hours.
Is this going to be like the savior for the market overall, meaning like the chip space and really AI overall? I know we kind of had this debate about whether there's substance to it or just hype, but we've seen time and time again a lot of companies and chips and software, et cetera, really showing very strong forecasts, not just what they made in the most recent quarter, but longer-term forecasts that are based on this idea that AI is going to be a power generator.
I don't know. I don't know the answer to that. I know that we've seen other cycles in the past where, especially with chip companies, where we've thought that, this could be huge for them. I think of cryptocurrency back in 2017 up to 2019, when we saw NVIDIA with one of its run-ups in the past because of, those chips used in cryptocurrency mining. I think this is certainly different. The question is to what extent is it like a layer over our economy, like, quote unquote, tech is a layer over our economy. I just don't know yet.
I wonder how much of it is also, it has to do with where we are in the cycle, right? Because we know there was a lot of inventory, but they've used up a lot of it. So it's a case of a new cycle, and we're going to start putting in orders. You could always cancel, can't you?
What's interesting? We're gonna have a VC guest a little bit later, and we're talking about how much VC money has really come down. But what's interesting is when it comes to artificial intelligence, if you want to know where the money is going, that's where it's going, and whether that's creating companies that ultimately bigger companies buy out, I don't know. But AI just seems to be, the thing that everybody is in love with, and it does feel like investor money continues.
Literally, last time we spoke, I think Katie sort of opened that door, as we said.
Oh, that's going to be a story coming up.
You want to go there?
All right. No, I don't want to go there. I do want to go to some of the individual gainers. Number one gainer in the S&P 500 and the NASDAQ 100, I'm going to just talk over you, is Moderna, up 7.4%. I have no idea why. Call volume above normal, directionally bullish, still down about 41% year to date, but it was a standout in today's trade. So that's on my radar. Cisco, number 2 in the S&P 500, number 2 in the NASDAQ 100, up the most, I think, about 6 months.
Now, is this the Cisco, the food delivery company?
No, come on. We talked about it last night after the close.
Oh, okay. I get confused.
Is that a rhetorical question?
I'm surprised.
There is a Slovak word, pukashitel, troublemaker, and that's exactly
now you know the secret, Tim.
That is Romaine. All right, so Cisco, outperformer, company outlining its headway into AI, fiscal fourth quarter results last night. Outlook investors are really excited about, so that's why we see this one really outperforming. One more for you. It's a small market cap. Please do not judge me. Microcap, about $546 million. Gambling Corp, gambling.com actually group. It's up about 16% in today's session. The digital marketing company reported second quarter revenue that beat the average analyst estimate and boosted the full year outlook. It was
That's okay, Carol.
Cool.
I did a company yesterday with
$500 million market cap.
I did a $62 million market cap company yesterday.
You judge,
And
you judge.
Did.
Now it's lower.
What's DWAC doing today?
Now it's lower. All right, well, let's get to some of the decliners today. We've been talking about this story all day. Walmart shares finishing down more than 2.2%. The company actually had a pretty good quarter. In fact, it raised its profit forecast yet again. Doug McMillon, though, the company's CEO, came out and made some comments that got investors concerned about what the consumer looked like. Kind of similar to what we heard from Target's CFO yesterday. Yeah. The rising borrowing costs, rising oil prices, and then, of course, those student loan repayments starting up again in just a few months. That's going to hit an already strained consumer. Jen Bartoshis over at Bloomberg Intelligence told us that is what is moving the stock because, this quarter, well, certainly I would say the fourth quarter is the most important, and this one as well with back to school and then the holidays coming. So the second half of the year, if the consumer isn't strong, then that's certainly an issue. CVS Health having a very bad day, worst day since October of last year. At its lowest, it actually fell the most since March of 2020, down more than 8%. This is after Blue Shield of California, it's one of the California's largest health insurers, said it would drop CVS's Caremark as its main pharmacy benefit manager. Instead, it's going to switch to a group of companies. It's going to include one from Amazon, one from Mark Cuban, that's Cost Plus Drugs. It expects to save as much as $500 million a year doing that. The concern, of course, is that other companies could start doing this too. We saw another company, we saw Signifel as a result too, because other companies could switch their PBMs as well. Wolfspeed finished the day down by more than 17% after the company reported adjusted fourth quarter loss that was wider than expected. Carol.
I'm taking notes. I think I have my two gainers for tomorrow, AMAT and Ross Stores, because they're both, AMAT's up about 3.5%, Ross Stores up about 5%. So
did you see Farfetch?
No, what happened?
Down 26% here. They just reported earnings, a big miss there. So another slice. I guess that's more luxury retail. But something to keep an eye on as well.
I'm not surprised Ross Stores is doing well, given that TJX had something similar, right? I mean, they're in that same segment of the retail market.
All right, guys. So things moving in the aftermarket. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, folks. We call it Beyond the Bell. We will see you again tomorrow.